Funny enough, most times the owners of small business always assume they are not going to pay taxes to the Internal Revenue Services.
That's for the state now.
For the state.
Okay.
Now, I need to break it down. The simple understanding is that corporate entities pay to the Nigerian Revenue Service.
Okay.
Individuals pay to the state Internal Revenue Services. Except for
you bake cakes from your kitchen. You run a POS stand. You sell sneakers on Instagram. You are running a nano business, trying to survive. But every time you hear Internal Revenue Service, taxman, taxmaster, you panic because you imagine men in suits asking for complex accounting books you don't have, or handing you a tax bill larger than your actual profit. Because of this fear, millions of young Nigerians stay hidden, running their businesses in the shadows. But what if the law actually had a built-in shield specifically for small businesses? Welcome to Tax Gauge. I'm your host, Hannah Rain. Today we're talking about survival, side hustles, and presumptive taxation. Joining us in the studio today to break down how state-level revenue collection actually impacts the youths is none other than the Executive Director, Plateau State Internal Revenue Service, and a member of the Plateau State Economic Team, Dr. Jim Pam Wires. Welcome, sir.
Yeah, thank you. Thank you for having me around.
All right, so this is Tax Gauge. We'll go on a short break. When we'll be back, we'll dive right into the conversation. We are back, and this is Tax Gauge. We have with us here in the studio Dr. Jim Pam Wires, the Executive Chairman, Plateau State Internal Revenue Service. You're welcome once again, sir.
Yeah, thank you for having me.
All right, so going into the meat of the conversation, we're discussing presumptive taxation today.
That's right.
No, so looking at the new tax law and everything that has been designed for the presumptive tax.
That's right.
Before we go into breaking it down or how it is paid and all that, what is presumptive tax?
Okay, so thank you very much. Now, one of the things you need to understand about presumptive tax is that you presume because you don't know the exact amount or income of a particular taxpayer or group of certain level of taxpayers. Now, Nigeria is heavily on an informal sector, which is estimated at about 70% of the population are completely informal. And those sectors are those who that drive the nano businesses, micro businesses in our market spaces. They don't have a kind of formal arrangement, but they have some kind of arrangement they made, either in terms of their union, associations, or different kind of trades. They come together and have a kind of union. Now, if you are going to carry on the presumptive tax from the tax administrative background, you are going to say, okay, these people within these ones that sell this kind of businesses, how can we tax them? So we just estimate that, okay, this will make roughly an estimate of certain level of amount. They will say, okay, we benchmark them on that amount. If that happens, you are doing what we call a presumptive tax regime. You're operating them under a presumptive tax regime. But however, in Nigeria, those that are always within the presumptive tax regime for a very long time have been left there. Because the idea is that you shouldn't be under the presumptive tax for too long. Because ideally, you're supposed to transit into a formal taxpayer after a while. So let me give you an instance. All of you are a group of individuals that sells, let's say, spare parts. Now, it means that it must get to a time that few individuals will metamorphose from those little sales of spare parts to a warehouse.
Yeah.
So when you transit to a warehouse, you shouldn't have been under the presumptive tax regime. You should have moved into a formal taxpayer where we now assess your income. Now, the idea about taxation nowadays, or in Nigeria now, is based on income.
Exactly.
So it's not based on, it's not based on maybe you assumed, or in another palace in the tax administration, they call it based on judgment. Now, just looked at you and I said, oh, you earned this amount, then I would That was what we call best of judgment.
Yeah.
And the presumptive tax is also connotes on that kind of arrangement that I looked at a certain group of individuals, then the best judgment fit them and say that, okay, all of them should pay this amount of levy or this amount of taxes as their income tax, as it were.
Okay, so that's what
Presumptive tax in a nutshell means.
Okay, so considering our target audience, who is majority made up of young people.
That's right.
So for a student now, for instance, who is a baker, who earns money by baking birthday cakes for her colleagues and friends, and still collects stipends from his or her parents.
That's right.
But still bakes cake. What is presumptive tax to this kind of person?
Great. So now you see, for a student who is schooling and probably doing some kind of nano business.
Yeah.
Now the idea of the new tax regime that was passed last year is now to remove those people from the tax net, because their income is just for survival. Okay. Now, what do I mean by survival? You know, taxation does not only just tax income; it matches both your income and your expenditure. If your expenditure does not give a reasonable profit, then you ideally are supposed to be exempted from the tax net. And that's what the new tax law tried to achieve. Now, not necessarily that it's trying to push presumptive tax out of the way. Yes, there could be presumptive tax based on certain arrangement on certain activities that connotes in the system. But for a baker who is a student and at the same time a taxpayer, so the little understanding that will make them to understand is this, so that I can break it a little bit simple, is that you should ideally submit your returns.
Okay.
Now, you tell the tax authority that I earn this amount, but I spend the amount in the same business, and what I literally live with was something to take home. And if my take home is not necessary or reasonable to be taxed, then we'll exempt it from tax payment.
Okay.
And again, you know, now there's a threshold even for businesses. Yeah, so there's a threshold for businesses. Now the new tax law says that although there's a conflict, but they've cleared the conflict. Now, before now, it was 25 million for business or small businesses that have a turnover less than 25 million. Then again, now they say that it's 100 million. But at 100 million, they also have a cap that says that even if your business goes above 100 million or below 100 million, but you have a fixed asset of up to 250 million, you're no more a small business.
Yeah.
So they're trying to look at a small business is a business that have a capital. Let's take, for instance, this studio here, that will check either all your assets and your equipment are up to 250 million. And you have a turnover of 100 million, it means you're still a small business. You will not be taxed company income tax. Okay. But that is for the Nigerian Revenue Service, the deformed FRS. Yes. But funny enough, you know, most times the owners of small business always assume they are not going to pay taxes to the Internal Revenue Services.
That's for the state now.
For the state. Okay. Now, I need to break it down. The simple understanding is that corporate entities pay to the Nigerian Revenue Service.
Okay.
Individuals pay to the state Internal Revenue Services. Except for individuals that are what we call international workers, foreign missions, somebody who comes to Nigeria to do business and goes out. Okay. Now, that kind of person is taxed under the Federal Nigerian Revenue Service because he's not resided in a country for a particular period of time. Okay. Now, the law says that if you reside in a particular state for up to 180 days, I mean, that is your tax jurisdiction for that year.
Exactly.
I hope I'm not speaking too many grammar anyway.
No, this is tax gauge. So we're
all right. All right.
We're breaking it down.
Yeah. So for that kind of student or so many other kind of nano businesses, okay, all the tax authority expects from you is that write to us and tell us that, okay, yes, I have income, but the income is deferred by the expenditure I used to. For example, a baker may have a turnover of, let's say, 20,000, 30,000 a month, right? Okay. But the cost of the flour, the cost of the sugar, costs. Yes, the cost of even raw materials, talk more of other costs, incidental costs that you attach to it, might give him about 20-something thousand. You would discover this profit margin is about 8,000. And that 8,000 might likely be his take-home pay. So would we tax the 8,000? If he shows that that is also his own salary, and the salary fall under the threshold of the minimum wage, then we say that no, so you don't need to pay tax on it. Okay. But again, that is when non-presumptive tax come in. So we look at those group of people that make little income and say that no, instead, because taxation is contributory, you're supposed to contribute, every individual is supposed to participate in it. Okay. So we tell you that, okay, we are putting all of you per annum at a flat rate of 10,000. You can decide to how you pay it. Oh. And if that happened, you're under what we call presumptive tax regime.
Okay, so Doctor, thank you so much for this. I love the way you really broke it down, and I trust that our audience, they are really picking a lot. But I want to take it home. You are the executive chairman of the Plateau State Internal Revenue Service. You are the helm of affairs, leading the conversation when it comes to new tax laws in the state.
That's right.
So, and I know you're doing a lot about presumptive tax and the domestication of the law. Fantastic, great job. We see everything that you're doing. So, but now I really want our audience to know, practically, what is the Plateau State Internal Revenue Service? What is your office doing? What are you doing in your region to ensure that presumptive tax is adopted according to these new tax laws in the context of everything you've said?
Yeah.
What are you doing practically to ensure that, okay, this presumptive tax is done according to the new tax laws?
Okay, so thank you very much. So let me break it a little bit down from the top to the center. Now, one thing about taxation is on the exclusive list. Now, exclusive, yeah, what I mean by exclusive is legislated at the center, at the National Assembly.
Okay, yeah.
So the states don't have the power to legislate on taxation.
Okay.
It's not on the concurrent list. So concurrent list is on the subnational, is over the subnational level. What the state has is that they have the power to domesticate what they have legislated at the center.
So you're saying now that the NTA was designed at the center?
That it have been time immemorial since Nigeria have been established. The taxation are on the exclusive list, and the reason is that so that we won't have different states coming out with different laws that contravene what is happening in the center.
Okay.
If you remember, there's a time that the FRS then had issue with Lagos, but Lagos introduced what they call consumption tax.
Okay.
And they say consumption tax is the same thing like value-added tax.
Yeah.
And remember, value-added tax is based on consumption.
Exactly.
So it's like double taxation.
Double taxation, yeah.
So in order to break the issue of double taxation and multiple taxation, as the case may be, the issue of taxation is legislated at the exclusive list, which is at the federal or at the center. And that's why the the four collection of bundle of the laws in taxations that we have in the country now, all of them are at the center. Now, it depends on all the 36 states, including the FCT, to domesticate.
Okay.
So what we mean by domesticate is that you accept it that is your own law in your state that you operate with it. And that's a simple definition of domestication. Now, so the FRS corrects corporate taxes, like I said earlier, while the states collect the individual taxes. Then again, of course, for all jurisdiction, for the first time, even the law allows us that what I'm doing in Jos or in Plateau State is the same thing in Kaduna, same thing in Lagos, same thing in Enugu, same thing in Bayelsa, same thing in Rivers. So all the states have the same processes. And that is why there is what called NTAA, the Nigerian Tax Administrative Act.
Yeah.
Right? So the Nigerian Tax Act, for the first time, consolidate all our laws and put them into one document.
Okay.
But for the first time, we don't have fragmented pieces of laws. Yes, all of them. So all of them are in one book.
Yeah.
And so that makes it much more easier that this time around I can pick this book and go through it. And it's the same thing for the person in Lagos, same thing for the person across the subnationals, as it were. And now coming back to what we're doing in the state.
Exactly.
Now, for us in Plateau State, we discovered that the only way we can achieve this presumptive and not to overburden to the poor, because the idea is that the tax law says that we shouldn't tax poverty.
Yeah, don't tax the fruit.
Yeah, so don't tax the you tax the fruit, don't tax the seed. Yeah. So the idea is, so we're trying to see how we move our taxpayers into the tax net, but in a more logical way. So we come to them through their associations, through their union, through their whatever they have different kind of until when you are, in fact, sometimes you see that, like, for a very good example is Market. Yes.
Okay, Market. Okay.
Oh, yes. Market Traders Association. Okay. Now, so they have a lot of them. You could have union of transport workers. You have union of teachers. There are so many of them in the informal sector. So we bring them. They know themselves. They know their members.
Yeah.
I would say that, okay, that not all fingers are equal.
Exactly.
But the irony is that if you are dealing with them, that's my experience in Jos, if you are coming with them as a union, that even the high and the low want to pay the same amount. They want the benchmark amount.
Across.
And taxation is based on your income.
Not.
So on that one, they wanted a flat rate. So because we are now operating a presumptive tax, we say, okay, yes, since we are dealing with you as a union, come like that as a union. But if we have any information available to us that some of you earn certain income above the other, there's no rule the rule says that you can give what we call additional assessment.
Exactly.
So we can assess you more. So I'll give you instance, there's this Petroleum Marketers Association that comes to me and said, they want to have the independent petroleum, that's their name, independent petroleum marketers.
Okay.
They said they want to have the same amount. But funny enough, one person have 5 filling stations and one person have only 1. Yet, for instance, all of them say, I will pay 25,000 per annum.
Okay.
So now the question is this. So, are you fair to the person that have 1?
Yeah.
And are you favoring the person that have 3?
Exactly. That's the real question.
So now what we do with them, we allow them to go like that.
Oh.
Then later on we say that we've assessed only 1 of your filling station. But we realize that you have 2. Can you report to us on the remaining 2? You see, they will come back in. But they said this like I said, no, sir. If this man have only 1 and you have 3, why couldn't you have? And again, you discover that the ones that are complaining are the ones that have the most sales.
Yeah.
Then later on we say, sir, based on our financial information, you even earn more. So you are supposed not to be under the presumptive tax.
That's what I'm supposed to say. So I want to ask, what are independent marketers, petrol marketers doing under presumptive?
The informal sector. If people want to remain in the informal sector, they don't want to go out of the informal. And the problem is that it's regulation. That they felt if I move from a presumptive tax to a formal sector, there are too many rules that will be disturbing you.
Okay.
So they are scared of the rules. So for that reasons, all of them try to remain there. And let me tell you the truth. We find out that there are some people that are making over 200 to 300 million in the informal sector. So the good news is that I don't chase them when they come under the presumptive tax. I allow them come into the tax net. Then what we do again is that we use our data mining machinery and mine data on them. So now, so that we can go to independently, even if we, in code, we issue tax clearance certificate, that doesn't mean it's sacrosanct. That we can still come back and also do an additional assessment and issue a new tax clearance on the new assessment. So these are some of the things. But the truth is, the informal sector is still so wide, the gap is so widened that every day we try to bring them into the formal system. And one of the things we're doing in JOS is that we try by all means, we just register them. Let them have a tax identification number first. Let them have the first point of registration. Once you have the first point of registration, we keep building on. Because the first point of taxation is registering. And also, if you are registering with a true identity, well, we also have issues of taxpayers coming to issue with the wrong identity. So I give you instance. That's why sometimes we tell them that most times, in fact, now it's a benchmark that if you are coming, you must come with your name. If you are a corporate individual, if you are a corporate entity, you come with your business name. Or for those ones that have company, they are paying on behalf of the company, they come with their certificate of incorporation and with your RC number. Now, this is because we want to know the true identity of our taxpayers. So they are also, by and large, so I think a lot of things around them, and we always have meetings with them. Sometimes we'll have meeting, we end up with a quarrel or a fight where we still reconvey and still continue discussion the other day. Because the idea is that I keep telling them, it is the constitution that made it mandatory for you as an individual to pay your taxes. And that is your first responsibility to the state or to the country. Now, any person that try to reduce or not to pay his taxes, he's not responsible to his country. He's not a true citizen of a particular country as he were.
We heard it right here on Tax Gauge. Dr. Jim Pamwire, the executive chairman of Plateau State Internal Revenue Service, has said it. If you do not pay your tax, you're not a true citizen of your country. We've been having a very interesting conversation with Dr. Jim, and we'll go on a short break right now. When we return, we'll dive more into presumptive taxation and how it is actually done. We'll be right back. Welcome back. This is Tax Gauge, and I remain your host, Hallel Rain. We've been having a very beautiful conversation with Dr. Jim Pamwire of the Plateau State Internal Revenue Service. He is the executive chairman and also a member of the state economic team. Thank you so much, Doctor.
Yeah, thank you, Hallel.
So we're going to continue right now. And what I really want to start with is a very practical question people always ask.
Okay.
And this question is, should they wait for presumptive tax, an assessment to be done for them or should they come to the service and file?
Okay, so, so this answer in a very simple language, no. The
Okay.
ideal thing is that we're operating what we call self-assessment.
Beautiful.
And the self-assessment is that you assess yourself, you submit to the Internal Revenue Service, and the Internal Revenue Service will review your assessment. Until when we have issue with your assessment, then we'll raise objection or we'll raise an additional assessment or whatever kind of paraphernalia we have to do, then we'll do it. So, but you see, in the informal sector will never come to the tax authority. And the reason is that, so because they are not coming, we'll chase after them.
But the whole essence of what we are doing currently is to build sensitization. So we are hoping.
I'm glad because it's under what we call voluntary compliance.
Exactly.
You must comply voluntarily without anybody coercing you to do it.
Okay.
And that's the regime we are here in Nigeria. But unfortunately, none of them come. But let me give kudos to some of the taxpayers. Exactly. They willingly come and tell you that, okay, I've earned this income. What am I supposed to pay? Some will tell that I've earned this income, the law said I should pay this amount. Sometimes we correct them and say, no, you're overpaying because they even withholding tax on what you are talking about have been reduced from 5% to 2%, for instance, or from 10% to 5%. So you are supposed to pay withholding tax. At the end of the year, we'll check all your activities, both your income and your expenditure. Then we give you an assessment on what you should pay. And those withholding tax will relieve some of the tax burden you have on your payee or whatever you've paid. So these are some of the things. But the good thing is that for the first time, the country is moving towards synchronizing the withholding tax payment. And the withholding tax payment now is making it much more easier for us to bring a lot of people into the tax net. Let me give you an instance. Most of the banks have their financial year and they declare a lot of dividends. We could now literally see withholding tax on dividend coming in. So we know somebody somewhere have earned income. So we are going to go after him and say that, okay, we've seen this income like this. So, and it will surprise you that those guys in the informal sector are investing heavily in big companies. And sometimes we'll come and say, you have, okay, like for instance, you have an issue or somebody from the informal sector want to come and issue because the land documents say that before they give you CO4 or RO4, you must have a tax grant certificate. So the person will come to you as a tax authority that I want to have a tax grant certificate, that my presumptive tax payment is 25,000 per month, per annum. And I want you to give me a tax grant for 25,000. And you asked him, okay, how much did you buy the land? Say he bought the land 10 million. You see, so there is a gap there. So you start looking at the figure. Say, okay, but you paid only 25, meaning that if you pay 25, let's assume it's even 10% of your income. When we're talking about maybe probably you earned like 2.5 million. Yet in that financial year, you're purchasing an asset of 10 million.
So what if it's money that has been saved over the years?
Good. If that has been saved over the years, then we'll now do back duty assessment because the law allows us to go back and check 5 years now with the new tax law. Before now it's 6 years. So now it's 5 years. We'll go backward and do what we call back duty assessment. We'll assess you. Yes, we agree you've been paying 25 maybe for the past 5 years. But now we looked at it. It means that there are some years that you have been underpaying the Internal Revenue Service. So if that happened, we give you a reverse assessment.
Okay. So how does the reverse work now?
Now, so the reverse assessment says that I looked at your activities, I looked at your financials, then I give you probably now with the aid of technology. So we have what we call different applications that do data harvest via your BVN and your NIN and your bank account. So when we have a BVN, it gives us all your bank statements. So we will harvest the data.
Okay.
Then also, I want you to also remember that the new tax law allows the bank on financial institutions, not necessarily the banks, even insurance and the rest, that at every quarter, if anybody has a turnover of 25 million, they send the report to us.
Oh,
yes,
so you don't need to request?
No, not on demand. But the law says that not upon demand. That once you have any customer that has a turnover of up to 25 million in a quarter, means in 3 months, he has up to 25 million. You send it to the Internal Revenue Service. You report to them. So we also go and check all those reports.
So sorry, let me just ask. Since January this year, since when the new law took effect, have financial institutions been obliging and doing this?
For the banks, yes. But for the other financial institutions, we've not been seeing it. So I'll give you an instance, like we have the money market, capital markets. We've not been seeing things from them. So, but then, it's our duty to also remind them that there are fines for them of non-disclosure.
According to the new tax law?
Yes. If you don't disclose, there are fines for them. So there are a lot. So, but anyway, let me not scare the younger guys that.
No. This is for the companies now. This is for the financial institutions. So they have
Yes.
fines for not
There are
sending these
fines
things.
for not sending the reports.
Interesting. So you're on a flow of thought earlier.
All right. So yeah. So now you see. So we'll now check your records.
Okay.
Check the financial, do data harvest, and check your BVN. Check the transaction you had over the years.
Okay.
If we discover that the 25,000 you've been paying us is far less than what you are supposed to pay, we'll raise an assessment based on what we have. But you have right to object.
Okay.
That say, yes, this assessment you might write, this is my turnover, but I have more expenditure in this, and this. And the tax authority also will consider your, and they can give you another reverse assessment now.
Okay.
Instead of, I said I talk about additional assessment.
Yeah.
Now we give what we call a revised assessment. So the revised assessment will state and capture what you claim. Then again, if you disagree, we also give you another one. If you disagree, then there are there's what we call the Office of the Tax Ombudsman, or there's what we call the Tax Appeal Tribunal. Then probably we'll go into that. If we go into the Tax Appeal Tribunal, then it means that we're going to court to go and settle our problem. But if we go to the Tax Ombudsman, we get a mediator that will look at us and look at us from different sides and talk about it. Of course, these are new offices. This had been in America for years. America have been having the Tax Ombudsman, and it'll help to mediate problems between the taxpayer and the tax administration.
All right, so before we draw the curtain for presumptive tax, I just want to ask this one final question. Now, taking us back to that student I drew attention to earlier. Now, this student has heard what you said now and knows that, okay, I'm meant to file my tax, but doesn't file. And then 3, 4, 5 years down the line, and he comes into the tax net. What happens? Would you, for now, you in your office, are you just going to start taxing that person from now, or you're going to backdate? How does it operate? How does that work?
Okay, so let me explain what the new tax law brought into force again.
Okay.
Now, before now, annual return is filed by the employers.
That's for pay.
Irrespective, we call it annual returns. That on organizations, for instance, Prime Gauge, now will file for all of you. That I have this number of staffs, and in the previous year or last year, they had this kind of salary, and this is their taxes.
Okay.
But the new law says that aside the corporate filing, whose deadline is 31st of March every year, the individual have 31st of January every year for corporate. Then for individual has 31st of March every year that they should file. Though ideally, as you are now, you are supposed to must have filed some 2 or 3 months ago your returns. Your own personal returns. Now, aside the ones the company does. The reason is that you might have what we call incidental income.
Okay.
So let me explain. Maybe you have a farm and you sell your farm produce, you earn income from there.
Yeah.
So it's just an incidental income. Or you have an investment in, let's say, Standard Bank, for instance, not to advertise any bank. Let's say to any bank, for instance, and the bank now pay you dividend. That's also an incidental income.
Okay.
So ideally, you're supposed to disclose that income. Okay. Now, if you come as an individual, 5 years down the road from today, let's say, for instance, 5 years from now, maybe in 2030, you come and tell us that you have never filed in for tax, now you are in the tax net. What the tax authority will do is that, yes, of course, we'll tax you of the current year. But if the law tells you that you are supposed to be filing since and you refuse to file, there's also offense for not filing, and there's also offense for late return filing, and it compounded over the months.
Interesting. So
ideally, we are going to compound all those months. So in 5 years, you know how many months we have.
That's 12 times 5.
Yeah, that's about 60 months. Yes. So we're talking about 60 months. So you compounded for 60 months.
And the penalty is 100,000 for the first month.
Yes, and 50 goes. You understand? You can imagine how much we are going to collect for you instead of you to file a nil return. But the law allows you to file a nil return that I did not make a profit, or rather, I did not even make a sale. Because there are companies today that a month will come and go, no sales.
No sale, yeah.
You understand? So the law allows you to file in what we call a nil return.
Nil return.
There was no income in terms of my return. No, so if that happened, we looked at it. But the good thing is that the laws are not cast in stone.
Okay.
And the tax authority have human face too.
Oh, okay.
You understand? So sometimes, like what I do with my taxpayers, I tell them that, yes, you've not been paying this and this. I'll give you instance. I have a company, they call it just JED, just Electronic Distribution Company.
Okay. Yeah.
Now, we establish a liability with them. Liability is so huge They said they have liquidity problem,
Hmm.
that they cannot survive the next day if we take away everything. So we tell them, okay, pay in piecemeal. Yes, we know that you have liquidity problem, but you also want it to survive so that we too can earn your income from it.
In the future.
So yes, so we allow you to be surviving while you be giving us in piecemeal. So our taxation allow also piecemeal payment. So for that kind of individual, we looked at their case. If it is genuine, we also advise you to, okay, pay in piecemeal. If you can't pay in piecemeal and we discover that you're incapable or you're incapacitated, then the law allows us also to give waiver. For the states, the governors have the ultimate power to give a tax waiver for any company or any individual, as the case may be. So if that happens, we can give you a tax waiver.
Interesting. Yeah, thank you so much, doctor. All right, so what this means summarily is this: that young individual who is a student, if he doesn't do what he's meant to do right now, in the next 4 to 5 years or 3 to 5 years,
It will
when
catch up
he
with him.
decides to come in, it's going to catch up with him.
That's right.
So you're headed right here on tax cage. You're a young individual, you're earning an income, go and enter the tax net immediately, especially if you're in Plateau State. If you're in Plateau State, you need to enter the tax net immediately because you're risking yourself if you don't do that right away. Well, this is Tax Cage, by having a very interesting conversation right here with Dr. Jim Pam Wires of Plateau State Internal Revenue Service. So you've heard it right here on Tax Cage. Staying in the shadows might actually be costing you more than stepping into the light. Presumptive tax is not a trap. It's a shield designed specifically for your side hustle. This conversation is far from over. So to our viewers, when we return, we're going to be discussing the domestication of the new tax law. This is Tax Gauge. Do well to like, subscribe, and follow on all our social media platforms as shown on your screen. I remain your host, Hello Ray. See you in the next edition of Tax Gauge with Dr. Jim Pam Wires.